And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. Glad to see you here. It is Wednesday, April the 19th. I'm John Hoagland here with the center of the universe, my dog Lacey. Good morning to you all. Thanks for trusting me with your time as always. It's context we are seeking, always thinking about risk management and patience. This morning, the 30-year mortgages came out higher than last week, 6.3 last week, 6.43 this week. I just saw a headline from Redfin saying that last month, home prices dropped faster than in the last 11 years, and that's not good news, of course. We were waiting for the 9:30 crude EIA petroleum status report, 1 o'clock, the beige book. Talking Feds today, the only ones that I see on the schedule are after the close, 4:30 Goolsby, 6 o'clock Williams. These are all, of course, in Central Time. So we've got U.S. stocks heading lower this morning after some pretty feeble upside attempts for the last couple of sessions here. The media is citing a few reasons for that. Netflix beat earnings but fell short on its guidance and had fewer than expected new subscriptions. Fox has settled its defamation lawsuit, the largest ever by an American media company. The stock was down about 1.5% this morning. Some CPI and PPI numbers from the UK came out higher than expected, representing some pretty sticky inflation over there. Investors, of course, will be focusing on earnings today. Doesn't seem to be helping things very much, nor does the fact that I'm wearing my rally sweater seem to be helping the equities. All of the early, bigger earnings came out today, all beating expectations in both categories. Abbott Labs, Morgan Stanley, U.S. Bank Corp, Travelers, all beating in revenues and earnings per share. After the close today, we are awaiting Tesla and IBM, a couple of biggies. Crude prices have dropped overnight on apparently some U.S. economic concerns. Of course, we're seeing that in the equities as well. Another possible rate hike possible. There was a draw last night, according to the API, of 2.6 million barrels in crude stock here in the U.S. The EIA forecast is for a 1 million barrel draw for you crude traders. The VIX is a little bit higher this morning, 1735 last I checked, 16.9 this time yesterday. The dollar index has been rallying all night. It was 102 last I checked. 101.68 yesterday at this time, and the yield on the 10-year also rising 3.63%, where it was 3.58 yesterday at this time. As always, we all always ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. This morning we've got Jason first in the room winning the prize this morning. We got Scott Saw, Andy Concord, Charles, good morning, Shaw, happy hump day to you as well, Besweed. I guess you gotta get in here pretty early to be first, but you'll get there. You're just in time, however. Hegel Matters, good morning, Bear Goes Long. Jason, Timothy, Dr. VJ, it's good to see you. Pete, good morning. Hopefully today will be a great day. Yeah, I didn't think that I was, trying to push the equities higher, and it just would not go for me. Good morning, Joe. Glad you're feeling harmonious this morning. Stephen, Edgar, Shy, Bill, John, Rooster. You're just in time. You're not late. You are crowing at just the right time. Dan Trader, good morning. John, Vince, Rusty, Mark, Andy, Tim, Will, Grounds Hero, good morning. Trading Research, Don Clemens, Jason, good morning. Sarah Hall, prayers and love to you as usual. Travis, good morning. Alejandro, Edgar, Dan Trader. Nothing is 100% in trading, not even the mighty rally sweater, right, Dan? Dude, thank you. I appreciate that. Vic's contract had rollover, Edward. RCU, JT, good morning. Good morning to Bluebell as well. Henry, good morning. Edward, Alejandro. Yeah, we are going to be gapping lower to the downside. We'll see that in the charts very shortly here. Rob T, good morning as always. So we're going to get into the charts pretty quickly here. We do have the group coaching today. Still, I don't have any emailed in questions, so I'll usually open it up with a question that we have had before or a thought that we've had before. I did that the other day, and I think it really kind of got a lot of juices flowing for the session. Here's the link so you can register right here, and that is, again, for group coaching. And then after that, we've got Make Hogue Money. Let me put the link in so you can register for that if you'd like to join the Zoom meeting. Of course, you can always see it on YouTube. Just a slight delay because of YouTube on that, but there we go. So again, thank you for being here. Thank you for all of your good mornings. Always like to see everybody that's here. Stephen, good morning. The market moves some every day that it is open. One thing that is 100%, yes, one thing we can count on for sure is prices are going to change. We're going to see if we can find a way to take advantage of that. Take a look here at the daily in the S&Ps. So we have three really kind of weak attempts at the market continuing to move higher, no higher volume. Yesterday, we only added 3,000 in open interest on this feeble attempt to move to the upside after a late spike. It really struggled to the upside yesterday. I sat down last night and we kind of opened up my charts after dinner and looked at it, and I said, you know, this just really isn't going well to the upside. This thing is going to pull back. And lo and behold, I could sit down this morning and it's already underway. Take a look at the 30-minute chart here. Let's look at this one. I prefer this one. So one of the things that I had me looking for a bigger rally to the upside by the close yesterday was the fact that we had some really negative delta. Price continued to try and push higher, but just didn't do a very good job. Tells me that, you know, this market may be a little bit too long in a certain time frame for it to continue to push to the upside, and it certainly seems to have kind of played out that way. We had some pretty big overnight longs in the market night before last, and when they couldn't see when they couldn't see profits continue, they're the ones that started this break. Now we had the late spike yesterday, right? The late spike to the upside means a high probability of acceptance of higher pricing. And the market did accept higher pricing. If you focus on value was outright higher. We were overlapping to higher on the overall range. Value was higher, and we managed to eke out a very small gain as far as the close is concerned, but it just didn't do a very good job of accepting that higher pricing, we should say. So we now have another recent high in the overnight session night before last. Today, we've got some pretty serious overnight shorts. So our shorter time frame, weaker hands overnight traders are holding on to short positions coming into the open this morning. We're going to be opening with a gap. Looks like we are rejecting higher pricing now. And it's something I was kind of thinking about last night. I mean, when when I sat down and looked at yesterday's attempt to try and push higher, it really didn't do a very good job. I gave it a D this morning. When I kind of graded the upside auction, it was really just not doing a good job of bringing in new participants, new volume, new open interest. So here we are looking at our pullback off the high. We know that there is some considerable unfinished weak structure down below this market. We'll probably be able to see that better on the TPO chart here. Maybe this one will show a little bit more of the time in further back. Here's a naked point of control. Here is weekly kickoff low. We've got this naked point of control. This is kind of an unorganized on this push to the upside. We've got this gap down here. We've got another naked point of control and another naked point of control. So there's plenty of visuals for this market to target on the way down. Now, I'm not suggesting that that's going to be happening today or even anytime soon, but the market just didn't do a very good job of trying to continue the upside auction, and it is now showing a potential failure of that. Take a look at the TPO chart. So there's our late spike yesterday. We opened above the late spike. We did keep value higher, but we didn't bring in new business. We just held there, seemed like we were holding on by a fingernail, and now we're seeing the market looking back lower. So, we've got the naked point of control here. We're probably going to be seeing today, of course, another one down here. Just kind of looking for the right opportunity for me to try and get into something today. Now, I'm into something good in gold. We'll see that here shortly, but there's a lot of space down below here. If we were to extend this trend line, okay, that it held yesterday, but now it looks like it is heading to the other direction. We've got this trend line here as well. Now, these are just kind of weak trend lines, not a lot of points of contact, only 2 points of contact here, but this could easily be targeted for us today. So on the open, I'll be looking for any evidence of an inventory adjustment, which would give me the opportunity for better trade locations if I were looking for shorts. But if price continues lower, that's likely to embolden sellers, and short time frame sellers already in the market will continue to get paid. It's going to be a challenging day, but aren't they always? What's going on with crude oil here? Let's take a quick look. All right, so here we are. We're at the low of the extreme of balance that we've been in here since 2 weeks ago when we left this weekend gap. All right. Weekly kickoff low we know is 79.50. 7,900 is the overnight low. We're opening back above that 79.50 level, which gives us the opportunity. It gives us the opportunity to limit risk at that level. It's last week's low. It's weekly kickoff low. There's likely to be some fish there. There is a possible market state break. We could leave balance and go directional to the downside. The rule is, until there is an acceptance outside of balance, we fade extremes, which would have us looking for longs down here at this weekly kickoff low. If we do accept below that level, and acceptance is of course subjective, it's through time, volume, momentum, participation, all of those things will mark acceptance below this level. There's nothing but space for a couple of bucks down here. So this is going to be a pivotal level for me today if I'm going to be trading crude oil. But I'm going to be using range bound to directional, range bound to breakout rules. Fade the extremes of the balance. Acceptance, you go with acceptance outside the area of balance. It's never easy. They don't make it easy. So here we are. This is the 30-minute chart. Here's overnight inventory is already, quite short. We've looked below. We're opening back above this inflection level here. So this whole area between last week's low and the weekly kickoff low it's kind of crucial. It's pivotal. It's vital. If we're going to hold that level and push our shorter time frame shorts back out of the market, we could see this market give us better trade locations for shorts if that's what we're thinking about doing. Upon acceptance in regular trading hours below this, we're going to be looking for opportunities for the market to pay us to the downside, because remember, we do have a lot of space down. This is that weekend gap that we see here on the daily chart. Here's the TPO from yesterday and where we're at today. Just opening. We've got a gap. We know we've got overnight inventory to the short side. Yesterday was a normal variation day. The IB, neither extreme of the regular trading hours, was an extreme of the initial balance. If you were to be looking at this, it's a normal variation day. There's a little bit of excess on the high, more excess on the low. Opening below that marks potential acceptance of lower pricing. We've got excess on all the highs, excess on all the lows. The thing that sticks out to me that did not happen yesterday, if you were paying attention yesterday, I said, we opened, we tested to this point of control relatively early in this distribution. We couldn't get to the upper distribution's assumed point of control. What doesn't happen is as important as what does. We lost 5,700 on an attempted upside move here yesterday that pretty much failed. We lost open interest. A lot of that open interest was, of course, in the May contract, 33,000 of it. So in by all rights, in the June contract and the June and July contracts, we added open interest. But overall, we lost that open interest, and it doesn't look like a very healthy upside auction was accomplished yesterday. What about the NASDAQ? Here's the daily. In the NASDAQ, we are much more range-bound still. The S&Ps, we're testing a weekly kickoff low, last week's low. We're not there here in the NASDAQ just yet. NASDAQ actually presenting as stronger, even though it's, I think, in a more of a deeper percentage of loss today. So we're still in balance. We added 5,300 in open interest yesterday, more than we did in the S&Ps. But we did not change the market state with that. As I still view that open interest increase as disappointing. Here's the 30. Overnight inventory short. We've got a ways to go before we're really in any possible market state break or seeking any weak structure down below. We're always looking at these points of control and gaps that were left down below. If the market heads that direction, that's when they become important. I don't see that happening here today. Of course, we never know. Yesterday, we had a big B-shaped profile for the regular trading hours. Here, let's look at the regular trading hours. IB high, big B-shaped profile, which indicates long liquidation, which would reduce open interest, so it's not being supported by the open interest, which increased. Did we add shorts yesterday? Quite possibly. Quite possibly. So, here's where we are now. We know we have overnight inventory to the short side. If the short time frame, weaker hands shorts don't continue to get paid early in the regular trading hour session, that's when they'll bail and pull us back into range. Opening with a gap, we always have the possibility for the value area special situation play, which upon reacceptance, opening outside range and value, upon acceptance of the previous day's value area, there is a probability that price could go to the other extreme of the previous day's value area at some point in that session. So if we do get a pullback and show signs of acceptance of value from yesterday, look for price to come all the way back to value high from yesterday. We're not there yet. We got to see what the regular trading hour participants do. If they start selling and they continue to push price lower, we're going to have a lot of very happy short time frame traders that are holding shorts from last night. All right, gold. Here we go. Yesterday's rally, or attempt at a rally, extremely feeble. Very disappointing. We added 300 in open interest on this attempt to come back into upside structure. It failed. It failed on volume as well. The market has given us a wonderful opportunity right at weekly kickoff low here, right off the open. So again, these weekly kickoff levels are important because they're where I believe that the longer time frame traders are going to adjust inventory. If we did see an adjustment in inventory in longer time frame, it happened off the open. So we tested below weekly kickoff low in the overnight session. When the market opened, it left the opening range at the low of the session. So if you were watching before the open, we have our whole moving averages below price. As price continued to push back above the weekly kickoff low, it offered a relatively cheap opportunity for a long even before the open. I don't usually do that. But we've got a whole lot of overnight longs. We've got an important inflection level showing signs of rejection below it. And now we've got a really nice long trade off that level. So our overnight inventory is probably a big part of why this pullback is happening. If we can't close the gap, we'll be out of this long before too long here. Because really the move is to the downside. I mean, take a look. We broke structure, weak rally yesterday, deep move towards an important inflection level early overnight, pulling back off that level. I'm of the frame of mind that longs should be reasonable and relatively short time frame at this time, because it looks like the market state has broken to the upside and a new market state, whether range bound or continuation of the downside, is likely. So we're not going to fall in love with this long. We're going to take a profit here, especially if we can't get to close the gap from yesterday, which is all the way up here. That's a pretty big move. What's the TPO chart look like from yesterday? IB, no extreme. Normal variation, extreme day. The market tried to continue to push higher, didn't do a very good job with volume and open interest. Makes sense that we had this opportunity off that weekly kickoff low, to be exact, 1983, the year I started trading. Well, the year I started in the industry anyway. I wasn't trading then. What about the euro? Euro has actually held up a little bit better with not so much of a market state break. We pulled back yesterday off that trend line in the regular trading hour session, but again, we lost open interest. We did not build new buyers. We got out of shorts. That's not conducive for continuation to the upside. We saw the dollar rally rather significantly last night. So we had the euro kind of looking like it was going to open below this level. What's the 30 look like? We had some overnight inventory that was short. The overnight inventories began to reconcile even before the open. It's put us back in range. I wouldn't even be thinking about value area special situation play here, it's just not big enough to take the risk. So we're going to look for some daytime frame structure to look for opportunities, probably to the downside here. It's likely that we're going to keep value overlapping to lower or outright lower in the euro today. Here's the TPO chart. Yes, Don, you are right. In the absence of bad news or any news, the tendency for the S&Ps for equities is to kind of grind higher. So here's the euro, a even bell curve, if you will, yesterday, normal variation, IB high, centrally located point of control. This is a very balanced profile. I could see us testing to the point of control and possibly getting an opportunity off that level. What about the 10-year? 10 years up against weekly kickoff low. It was another feeble attempt at a rally yesterday. We only added 9,800 in open interest in the 10-year. That's I would almost call that inert. Doesn't mean anything. So just a little dead cat bounce there and possible continuation of the new downside market state, kind of a step two confirmation of a downside market state if we accept below weekly kickoff low, which is 1407. Here's the 30. Interesting. A couple of feeble attempts to hold above this level. We've opened below it. We're testing back to it. Overnight inventory is giving us the opportunity to look at weekly kickoff low as an important inflection level. The ability to limit risk is here. We don't know what's going to happen. All we know is if we can't get back above this level and reaccept above it, we're looking for opportunities for shorts. TPO, normal variation day, little excess on both sides, but a weak low compared to the previous day. No gap close here just yet. And another feeble attempt at a rally yesterday in the natural gas. We lost 2,800 on really low volume. Now, it is coming into rollover, so this may have something to do with that. Here's our feeble attempt at a rally. It actually showed acceptance through time, but not so much today. Here's the 30-minute. So the market opens, rallies, holds, closes above weekly kickoff high. Now we've got overnight shorts that are continuing to get paid. We still have the weekend gap down here. There's some weak structure down here that the market may target. Here's the TPO chart, and we'll get down to business. So it was a double distribution trend day yesterday. If you remember, weekly kickoff high was 234, right? About here. So the market opens, goes up above that, balances, actually puts in a poor high, and now we're showing signs of rejection above that level. Big weekend gap here. I wish I could just snap my fingers and say, I know what's going to happen. I know what's going to happen. But nobody can do that. So we just try and focus on context, what the market is trying to tell us. Sometimes that is much more clear than it is at other times. So we'll just remember to trade what we see, manage our risk, look for asymmetric opportunities where the reward we see in a potential trade is much greater than the risk we have to take to get in the trade. Let's take our deep breath. Remind me to stay humble, grateful, and creative in my trading today, and stay centered. As Joe D says, harmonious. We're going to try we stay centered and harmonious in our trading today. I like that, Joe. And we will see what happens. I'll see you for group coaching, Make Hogue Money, and the reflection at the end of the day. Happy Wednesday, everyone. Don't forget to be kind to yourself, kind to others. Say a prayer for peace. God knows we need those prayers. Trade well, and I'll see you later.